you can't really fail at it unless you buy the wrong stock or just get excited at the wrong time. But if you own a cross-section of America and you put your money in consistently over the years, there's no comparison.
Want to know how global shifts are shaping your wealth? Don't miss out. In this fast-changing world, economic trends can make or break your financial future. From the rise of asset prices to the massive wealth transfer happening right now, the way you manage your money today could determine your success tomorrow. Stay ahead of the curve, discover the secret forces driving your wealth, and how to stay in control before it's too late. Wealth effect. In 2020, global economies faced the COVID-19 pandemic, sending financial shockwaves worldwide. With governments implementing lockdowns and restrictions, consumer spending plummeted, resulting in a dramatic drop in demand for various goods and services. But as the economy slowly began to recover, a new trend emerged. People were spending more. This shift was fueled by the wealth effect. As stock markets surged and real estate values increased, people felt wealthier. They began to spend more, believing that their financial future was secure. A great example of this was Elon Musk, whose Tesla stock saw remarkable gains. This wealth boost helped him and others like him expand their influence on the economy. The wealth effect illustrates how economic shifts can directly influence consumer behavior, with spending habits heavily relying on perceived financial stability. As global markets recover, many individuals are expected to follow suit, trusting that their wealth will continue to grow. Monetary policy. In 2021, central banks around the world faced the challenge of navigating a post-pandemic economy. The Federal Reserve in the United States and other global institutions slashed interest rates to stimulate growth. This move was aimed at making borrowing cheaper and encouraging spending. However, these actions also had significant consequences on wealth distribution. With low interest rates, those with access to capital, like Jeff Bezos, who saw his wealth increase with Amazon stock, became wealthier, while those without resources struggled. The wealth gap widened as the rich benefited from rising asset prices, such as real estate and stocks. The role of monetary policy in shaping wealth is clear. It directly impacts the flow of money, encouraging some to invest and others to take on debt. As these policies continue, the effects on wealth inequality are likely to be a central concern for future economic strategies. Asset prices. In 2022, asset prices saw massive fluctuations, with real estate and stock markets experiencing wild swings. Bitcoin reached record highs, peaking at over $68,000, while traditional assets like real estate were increasingly out of reach for many. Warren Buffett, known for his value investing approach, warned about the risks of rising asset bubbles. The volatility in asset prices heavily impacted individual wealth. Those who invested early in stocks or real estate saw their wealth skyrocket, while others who entered the market late struggled. Elon Musk, through Tesla, capitalized on stock price increases, amassing even more wealth. The ups and downs of asset prices show how vulnerable personal wealth can be to economic shifts. Understanding these trends and their potential for volatility is essential for anyone trying to protect or grow their wealth. Wealth transfer. By 2030, the world is expected to witness the largest wealth transfer in history, as baby boomers pass on their assets to younger generations. This transfer is estimated to be worth $68 trillion in the U.S. alone. The shift in wealth distribution will have profound impacts on personal finances, especially as younger generations, like millennials and Gen Z, inherit substantial assets. Celebrities such as Oprah Winfrey have openly discussed their efforts to plan for this transition, ensuring their wealth is passed down responsibly. This monumental transfer will change the landscape of wealth, creating new opportunities for younger individuals to build their financial future. As this wealth shift unfolds, how it is managed will determine whether it helps reduce inequality or deepens the wealth gap. The way younger generations approach and invest inherited wealth will be key to shaping the future of global finance. Inflation. In 2022, global inflation reached alarming levels, with the U.S. seeing rates as high as 9.1%. This surge in prices affected everything from groceries to gas, dramatically eroding purchasing power. Celebrities like Kim Kardashian and LeBron James were among the few who could shield themselves from inflation's effects, thanks to their diversified wealth in real estate and business ventures. For most people, rising costs of living meant a squeeze on household budgets, especially for those without significant investments. The wealthier were able to hedge against inflation, but for the majority, it meant less spending power and growing financial uncertainty. Inflation's impact on wealth is clear. It hits consumers directly, shrinking their savings, while also forcing central banks to raise interest rates, which can further hurt those already struggling. Understanding how to protect wealth during inflationary periods is vital for securing financial futures. Globalization. As of 2023, globalization has continued to shape economies, offering both opportunities and risks. While multinational companies like Apple and Amazon expanded globally, wealth has increasingly concentrated among the top 1%. Elon Musk benefited from global supply chains and international market growth, with Tesla's stock soaring as demand surged worldwide. However, many workers in developing countries faced stagnating wages, despite the boom in global trade. For individuals, globalization meant access to cheaper goods but also competition for jobs and resources. Celebrities like Jack Ma, who expanded Alibaba's reach globally, are prime examples of how globalization has enabled wealth to grow exponentially for some, while leaving others behind. Globalization's uneven effects on wealth highlight the need for a balance between economic growth and fair distribution. As the world becomes more interconnected, understanding these dynamics will be crucial to navigating personal financial security. Technology. In 2021, technology continued to redefine global finance. Companies like Microsoft, Apple, and Google soared in value, creating vast amounts of wealth for investors and CEOs like Bill Gates and Sundar Pichai. With the rise of artificial intelligence, blockchain, and fintech, new opportunities for wealth creation emerged, especially for those who embraced innovation early. However, this technological boom also created divides. Wealth was increasingly tied to tech-savvy individuals, and those without the knowledge or resources to participate were left behind. Mark Zuckerberg's investment in Meta showed how tech-driven ventures could generate billions, while traditional industries struggled to keep up. Technology's rapid pace has reshaped the global financial landscape. For individuals, staying informed and adaptable to new trends is essential in protecting and growing wealth in an increasingly digital world. Shadow banking. By 2022, shadow banking had grown significantly, with institutions outside the traditional banking system playing a major role in global finance. These entities, such as hedge funds, private equity firms, and investment banks, helped fuel economic growth, but their lack of regulation made them risky. For wealthy individuals like George Soros, who invested in hedge funds, the shadow banking system provided high returns. However, these financial products were often unavailable to the average consumer. The 2008 financial crisis showed how shadow banking could create instability, and the pandemic brought new challenges, as investors sought high-risk, high-reward opportunities. Understanding shadow banking is crucial for anyone looking to preserve wealth. Its ability to generate significant returns comes with the potential for major losses, and navigating this system can determine financial success or failure for many. Ready to unlock the secrets to boosting your wealth? Don't let this chance slip by. Be sure to check out our next video, Decoding the Stock Market, Mastering Market Cycles for Profit. You won't want to miss this insider info. Hit that subscribe button and turn on notifications so you stay up to date with everything you need to navigate these economic shifts and secure your financial future. Time's ticking. Make your move now.